at 8:41 p.m. on Thursday night, January the 8th, with a video which I hope will explain our use of various time frames in our trading. This is a chart of the spiders, and currently what I want you to see is we're trading at volume by price resistance. As we can see here, we made quite a run the last 3 days off of this low. In ES futures terms, we're about 74, 75 handles off of this bottom right here. We had volume by price support that we bounced off of, and if we look at our indicators, we see slow stow 14 and 5-1, both on a buy signal. And we see MACD histogram as well as MACD itself on 5-14-5, the short duration, on a buy signal as well. The longer term MACDs, 1939.9 in particular, is used for sell signals. Okay, and you can see that we're currently still on a sell signal. However, the histogram has changed course. Now if we look at our shorter time frames, for example the 15-minute, we're still on a buy signal over the last 2 days. This is the bottom on Tuesday that we pointed out on Twitter and StockTwits. And we have a buy signal here on our 144 stow, again on the 15-minute chart. What I want to point out is, although we're on a buy signal with regard to SPY daily, we are looking to go short in the very near future. So if you follow me, you have to know which time frame I'm using. Let me show you an example. Here is the SPY on January 6th. And what I was looking for is starting some January 204 calls. Actually wound up taking the 204.50s with 10 days to go if stow triggers. Now this was at 11:51 a.m. Now if I look at the previous post by clicking on my name, you can just see my entire stream. So here we are at January 6th at 10:33 a.m. and I've been posting, and here we are. Here's SPY at 11:29. I'm looking at the 1 standard deviation Bollinger Bands, which if you look at my chart, the first standard deviation is this darker area. Okay, you see that here. And the outside bands are the second standard deviation. Now when I trade options, I keep this in mind because the first standard deviation is the inside part of your bell curve on the options screen of either TOS or whatever platform you're using. So I want to keep my premium that I'm buying inside the 1 standard deviation. So I want to keep my options within 1 standard deviation because I know that my probabilities of success are much higher here than they are out in this part of the curve over by the second standard deviation. So first standard deviation are these verticals, second standard deviations are these verticals, and that's where you get your probability of profit here at 33%. Because here's the current price, this is where the options are. In this case we're looking at the 207 calls. I have a 33% probability of being in the money, which means I have a 67% chance of being out of the money. So hopefully I haven't lost you thus far, but that's why I point out standard deviation 1 on my chart, and also why I'm talking about standard deviation in this blog post. Now if we go further into the day, I'm looking at SPY Jan 2046 calls with 10 days ago. That's the post that we're talking about. We're looking at SPY, the S2 on the 5-minute, which if you bring up this post, you can see what we're looking at right here. Prices are right on S2, and you can see where the slow stow is. We're getting a trigger on the 14.1 here, okay, but we want to get a trigger on the 144. The reason why is because the 144 is much harder to trigger, and that's what we use for a signal. This is for an alert, and this is for the actual entry. And then you watch MACD as well for a cross. So here's S2. So now if we go back to that post, the very next post is this one right here, where we're looking at the 15-minute chart, and I'm saying stow 2 about the fire. Okay? So you can see the time here is January 6th, 12:55. This is the reason why I post on StockTwits and Twitter, so we date and timestamp everything, and I can keep a running journal of the trades that I'm taking. Now you can see right here on the 15-minute where we are. 15-minute chart. You can see the levels that we're looking at, these horizontal lines. We're sitting right on this, the bottom of this volume by price bar, and we use 3 different time frames on a 15-minute chart. Number 1, the 5-1 stow is already fired, so we're already alert to the fact that we could be taking a trade. We use the 5-1, the 14-1, and the 144. Now we're looking for the 144 to fire. Number 2 is about to fire as well. All right, so you can see. Now here's the mindset. We are moving lower, and currently on the daily on January 6th, we are on a sell signal. However, when we're down at the bottom, down at lows, we're looking to take long trades on UPRO or on SPY options. We're not looking to sell at the lows, we're looking to buy. You need to reverse your thinking cap when you're trading like this. Conversely, when we get back up to highs, we're looking to short. We're not looking to go long. So early in the day on January 6th, 11:29 a.m., you can see what we're saying here. Daily first standard deviation bands expanding down. Bears appear to have control for now. For now. That's 11:29. Now you can see the state of the chart at that point. We're at these lows. We're sitting on a pivot level. We're looking to go long here, actually. We are cognizant of the fact that we have a support level down below at this volume by price bar, and that we could completely lose this area here. We see that we're at the 1 standard deviation, the lower band, and we have the second standard deviation down here, which, if you remember, using standard deviation, this is your first standard deviation lines here. All right, so that's 68% of price action either side of the current price, or 34% on either side. You have to be aware of that when you're buying options. You have to also be aware of what your volatility rank is, your IV rank, which currently is 43%. So on that day, we were at support. Stow was looking like it was getting ready to turn. We were talking about that. We're currently on a sell signal on all 3 time frames. But we're looking for MACD histogram to reverse course as we hit support. Fast forward 12:55 p.m. and we're about to get a trigger on stow number 2, followed up by stow number 3, which would be a buy signal. Now, here's something to consider. Remember, this is 12:55. So this is 12:55 p.m. Let's fast forward in time. We can see that Mikey took the same trade, 30-minute chart with all time frames holding support. He's looking at this area right here with these volume by price bars, and look, he's got the same setup that I'm looking at. He's using the 30-minute, but I was using the 15-minute. You can see stow triggered here on the 14.1, and here he has the 144 down at the bottom getting ready to trigger as well. But he took this trade on UPRO, which you can see right here. He went long on UPRO using the SPY intraday charts that we were using as well. So here's something else to consider. If you follow anyone on Twitter and you use TweetDeck, all you have to do is click on a person's handle. this pop-up dialog box will appear. You can click on tweets, and this will give you their entire stream. Here's the bottom line. If you're going to follow me on Twitter or StockTwits, you need to know the time frames that I am posting and understand that I may do something that makes no sense to you. If that's the case, ring me up, send me a tweet, or send me a message on StockTwits, and I'll try to answer it as quickly as possible. We had one occasion today where a trader thought that all of my signals, all of my charts were on sell signals on the daily, but they didn't understand what we were looking at on the 15-minute and intraday charts. So you need to be aware of the time frames that we're talking about when we're trading stocks. Okay, if you're going to follow me, that's just one prerequisite that I ask you acknowledge, because I'm not a subscriber service. I can't hold everyone's hand. I assume that you understand what I'm doing when I trade. Okay, so this is Cousin Vinny coming to you from theclosingprint.com. For you new traders, be sure to check out these top 5 or 6 videos, which will give you a better edge on understanding the markets, taking setups, and where to position yourself for the highest risk reward on your trade. In addition, if you don't subscribe to the blog, this is a spam-free site. Enter your email address in here and you can get these delivered to your email every day. You'll note my tweets are here, the watch list for the week or the day. You can just scroll down through these, keeping track of the trades that we're looking at, whether they're high tight flags or Bollinger Band setups. It's also a place for me to document the trades and thoughts going into the weeks. So I hope this helps. Take care. We'll talk to you on the stream on Monday.